FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is June 18th, 2020. Well, stock market is back doing its magic, the ultimate wealth creating machine. It's a black box. You just stick money in and more money comes out. What could be better than that? I'm sure it can only work out well, and it's magic. And can the magic continue? Well, Danielle Park is with us. Well, what do you think? Do you think the magic will go on? Do you think the market keeps going up? Email us. Let us know your thoughts. KL@kerrylutz.com, or put them in the comments section of whatever platform you're on, whether you're on the podcast, my website, or YouTube. And Danielle, so the stock market defying all logic and all sense of reason, huh?
Well, I mean, it's still lower than it was at the peak in February, and it fell off 5% on Friday. And, it's rallied back a couple of percent in the last couple of days, but, it's still down. And I think the problem is that every time it comes off at all, you have either Larry Kudlow come out on behalf of the government and assure everyone that they're going to spend a bunch more money, or you have the central bank head, Jerome Powell, promising to buy even more assets. And neither of those headlines are new, of course. That was what the interesting thing is. In the last couple of days, the rally was sparked supposedly by saying they were going to buy corporate bonds, the Fed. Well, the Fed already said that, as you know, in March, which is what sparked the rally off the March 23rd low. So there's nothing new in terms of information there, but it's sort of like every time there's a rollover, they panic and say, hey, let's throw another round of something at this. But the main buyers in this environment are the retail crowd, which is never a good sign, Kerry. We saw that at the peak of the tech wreck. Of course, the online trading community, the locked in their house on government benefits, using day trading as a video game, only with real live ammo. Yeah. And so the story there's so much corruption and circular activity going on here. So Robinhood, the greatest irony of all time, is this company, as you know, that promises to let its people pay or trade with no commissions. But the reality of their business model is they make money by selling the trading flow to all the other algo generated hedge funds who front run that. So they've made $100 million selling their customers' advance information to the hedge fund traders in the last couple of months. And the Robinhood crowd, they have the ignorance is bliss defense, where they don't have to know anything about valuations or measurements or investing. They're just pure out gambling. Fractional shares, Wall Street has made it so easy to be a casino and to participate with very little capital. But altogether, those people are trading in a lot of the names that are driving the rally in the recent rebound. So, meanwhile, 78% of asset managers surveyed by Bank of America admit that the equity prices are the most overvalued they've seen in the last 20 years, even worse than in 2000. And yet, the ones that have to stay long, or the hedge fund community, are the most speculative net long that we've seen since September of 2018, just before that fourth quarter meltdown. So we have a lot of interesting sentiment indicators where consumer sentiment is rebounding with the reopening a little bit, but off a very low mark, as you know. Investor sentiment is all out euphoric in terms of the people that are trading this thing. At the same time, we have assets in money market funds at the highest since 1993 by a huge margin, much higher than in 2000, much higher than in 2007-9 in that period. So the way I see it, there's a group of people that have already bought. Some of them are borrowing to buy more, to lever themselves up. And then there's a group of people that are actually trained at investments and valuations and measurements who are not going to buy. And so you've got this big standoff between bulls and bears. So you've got at the same time near all-time highs in stocks and junk debt, as well as near all-time highs in cash and money market. And they just are at this standoff, and you've got the head of the Fed promising to just try everything, including illegal things that are not actually, allowed by your constitution, just to sort of talk the market up, to try and boost confidence. Yeah. So it's quite a mess, I must say. And meanwhile, in Canada, we have had some rebound in terms of retail sales, like you guys did this morning, because in April everything was basically shut. So in May you're getting some rebound, but it's tiny relative to anything like what we were in the May of 2019. Yeah. So even as we try and slowly reopen like patios and some of the restaurants and services up here, the attendance is, minuscule, because people are just thinking, if I don't have to take the risk, why wouldn't I just take takeout, or why wouldn't I just shop online? In retail sales, if you look at in May, food and beverage and online shopping were up a bit, but everything else, Kerry, was down very sharply. Yes. And I think that's a function of two things. One is that people have a lot less income to spend. Like I know some households in America have actually a bit more income because of the benefits from the government, but those are time limited. In Canada, on average, we have 20% less income in the households, even with government support. And that's translating into two camps. One is people who are spending a lot less because they have a lot less money and they're worried about their employment, even if they are still working. And other people who have income but are choosing to save whatever they can because they're worried about, the next wave of white collar layoffs, for example, that is likely to come. So meanwhile, the IMF is saying they won't see, they're now going to revise down their global growth picture for 2020. They thought it was a contraction of 3% in April. Now they're going to make it a further decline when they revise their numbers released this month. So there's a lot of big picture stuff that shows that this is going to have a long-lasting impact on demand, on behavior, on sentiment, on growth. And then you've got Wall Street wailing away.
Yeah. Hey, speaking of that, so what about Tesla? It broke 1,000. It's trading at or near all-time highs, and it just keeps getting better. Is that part of the Robinhood effect?
I think that's a pretty pricey stock, although they could be doing it fractionally. I'm not sure if there's a lot of Robinhood buyers in that particular name, but I definitely think it's been one of the rat packs, so to speak, one of the best performing semi-tech sector, names that has been much loved and overpriced in this recent rally. Not to say that the car isn't great. I was just driving at lunchtime and stopped at a stoplight and in my Tesla, and two people walking by gave me the thumbs up. And that happens all the time. Yeah. You're just random people will be looking at the car as you're driving by and they'll wave or give you the thumbs up. So, but as I've said many times, I divorce the product from the price of the share. Sure. The price of the share is definitely, it's very easy to tell. As soon as you have a sell-off day, like Friday, or like the period from February to March, everything takes a trouncing, right? It's almost nothing that escapes a big sell-off. And that really gives you a tip or an insight on the fact that the momentum trade that's driving things is infecting everything at the same time.
Mm-hmm. Yeah. That's kind of fascinating that when you think about it, that hope kind of springs eternal. Just something about the Tesla that I do appreciate about it is it's a breakthrough product on so many levels, but maybe the biggest one, in my opinion, is the fact, and you can bear testament to this, is the Tesla you have now is actually a better car than the Tesla you had when you bought it.
Yeah, sure. It gets updates all the time. Yeah. And of course, there's been advances made in the battery technology too, which was another thing announced this week, right? That they're going over the 400 mile an hour range on some of the new batteries.
Yes.
400 miles per charge on some of the batteries.
Yeah.
So, but I mean, I haven't been to a gas station or a service station. I haven't spent $1 on that car in over a year. And I got to tell you, when everyone's looking to pinch pennies and things, it's nice to not be laying out anything in terms of, just transportation costs.
Sure. Sure. And they released the Model Y. It's supposed to be the best car ever, according to the Wall Street Journal car reporter. And, he only had positive things to say about it. Well, so things, like we say, we've got to split the stock market from reality. But reality for Tesla looks pretty good. It's a question of, are they going to get hit by the recession, by lack of funds? Right now, you want to borrow money for anything, the money's there. Is that going to stay that way?
FSN Radio. It's all about what's next.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
The Financial Survival Network. It's all about what's next.
No, that'll not stay that way. That never stays that way. I mean, see, the thing is that the Federal Reserve can promise to pump and fool around in asset markets, but its actual weight is a fraction of the market cap of the, for example, stock market or of the actual junk debt outstanding. There's a record amount of corporate debt already on the market, and there's only so many dollars to go into this stuff. And we saw that again when the stock market sells off, corporate debt sells off as well. Elon Musk was very much earlier in the company duration or story development back in 2008, but he nearly went bankrupt then, right? Because he had a lot of leverage. And just like any other highly indebted company with a big cash burn, they're heavily capital intensive in what they're doing. And, as soon as you get a disruption or slower cash flow coming in, you have a problem in terms of the cash that you don't have enough to service the debt that you have. So I'm not saying that they will necessarily go bankrupt or anything, but I'm saying that we should never expect that any company that's highly leveraged and in need of a lot of high cash flow to just keep the thing going will be immune to, the ongoing downturn. And that's the missing piece. Again, the Fed can print dollars and push up stocks, but it can't create actual demand in the economy. It can't make businesses borrow money when businesses already have too much. And that's what we've seen with the PPP program in the United States, as well as our corporate loan program up here. They're promising to roll out more in terms of business loan programs, but the reality is that businesses haven't taken up the entire amount that's been offered already because it's a cash flow problem. It's a sales problem. They can't take more debt and service it when their sales are not coming back.
Yeah.
And they're going to continue to cut costs. Interesting, CalPERS, the big pension company today said that from California said that half of their workforce will now work from home permanently. So every week, it seems another company's coming out with a plan to how they will permanently reduce their expenditures going forward. And I think that's just a revelation of the fact that there's not going to be a sharp bounce back in spending demand. More countries in the world are in recession today, Kerry, than at any other time in the last 150 years. That's more than in the 30s. 40% of the world's economies are expected to be in recession this year. So we're talking about a whole different, you can't even get your head around that that's just a reality of what is going on with the shutdown, but I think also coming at the tail of this massive debt bubble and the overbuild. So, for example, Manhattan hotels, they're saying 20% of the capacity there may not come back. But that's not surprising when you consider that for the decade before that, there was so much overinvestment in that space and there's so much oversupply. Same with the travel agencies, the travel airlines. Again, they had a doubling in their business over the decade before because of cheap credit to consumers. And I'm just saying that's the part of the puzzle I think that is now making a behavioral change. And we're seeing that with a jump in savings rates. And I think that people are not likely to go back to their completely reckless spending ways for some time.
Yeah. Yeah. Well, what amazes me, what about all the Airbnbs that have really been hit by this? I was always trying to figure out, Danielle, what was the weak part of Airbnb? What was going to cause it to go bust? Never thinking about a pandemic where just all travel in the world stops.
Right.
And now they've got their fingers crossed that it's going to come back and maybe less people will stay in hotels and go to Airbnbs because it's less costly. And if they're going to travel anyway, it just might be the case.
Sure. I think there'll be a definite resurgence in some demand. I mean, let's not forget, we were shut down completely in April. So we should expect to see a bounce in the data as we reopen some services. But what I think is most likely is that in major cities, like where I live near Toronto, the new listings for May went up 69% over April. What I noticed as well is that there's a trend of Torontonians leaving the big city and coming up into cottage country, looking for, properties that are kind of green space and have, somewhere to get away from the massive population. So it seems to me there's going to be a definite inclination of those that are able to downsize and move out of the highly urbanized areas into more, sort of urban settings. And then others are going to figure out ways to do that both with their business and with their living arrangement. And I think that's going to continue to put pressure on both hotels in the downtown area, Airbnb, the real estate market in general, commercial space, all of it.
Yeah. I'm inclined to agree. And, a lot of people have been counting on that added revenue, not just for their own dedicated Airbnb properties, but they have an extra room, an extra cottage, a mother-in-law suite, and they rent it out and they get pretty good income. And that helps defray a lot of their carrying costs for the property. And really, they're counting on that money as if it was money in the bank. And we'll just have to see how travel rebounds. I want to go back to what you were talking about with Robinhood, because there was that phenomena, Hertz Rent-A-Car.
Yeah.
One of the hallmark brands. And it's not just Hertz. They own 4 or 5 other rent-a-car companies that they acquired during the Great Recession. So I think there's 6 companies. They're bankrupt. Normally, in a bankruptcy, you know that the restructuring that's going to take place, assuming it won't become a liquidation where the company ceases to exist. Here, these brands are worth money. They almost certainly will carry on. But the Robinhood effect on Hertz, companies bankrupt, the equity holders are going to be wiped out for all intents and purposes. And yet, the Robinhooders drive up the stock from like $1 or $2.
40 cents. It was at a low.
Was it 40 cents?
To $5.50 or so.
That's insane. I mean,
and then it's down 60% in 2 days again. I know. Well, it's totally nonsensical. It makes 0 sense except in a casino mentality where you're going for broke, as I like to call it, and there's a reason they have that phrase. Yes. Even the company had to come out and say, listen, people buying, they issued that new debt based on the ramp up in their share price, and yet they had to warn at the same time that anyone buying this is likely to lose all their money, and still people are buying it. So, this is like scratch and win tickets. This is what this is.
I think your odds are better, honestly, on the scratch and win. You're sure to get wiped out, and it's kind of like the greater fool theory. There will be a greater fool that will come along and buy them out, and they'll make money on it. But eventually, they're going to run out of greater fools, right?
Well, and they're so overly confident and, aggressive and critical of anyone that's doing it. What was that guy, the Dave guy? He was critical of Warren Buffett, saying he's has been. I'm all about what it is today and all that. So in the land of tiny people, how does that saying
go? The land of blind men, the one-eyed man is king.
Yeah, and there's one about height too, but I don't know if it's appropriate. But you don't compete with fools, because fools are in a category of their own. And yes, they do look like they're genius periodically when they get lucky, but that's not what most people. Those with something to lose, and that's frankly, some of the Robinhooders have a bit of money that they've put in and they'll lose it. Others are basically just playing with tiny amounts, and they don't have anything to lose. They literally see it as, I might as well take a risk and gamble this and hope I win. So it's just, we can't allow. There's so much bad leadership right now. There's so many poor examples. There's when central bank heads like Chairman Powell, for example, who has millions of dollars in these assets of his own, is allowed to do things like direct millions of dollars of central bank trades through Barclays and his cronies at different firms, and enrich himself and enrich his buddies and bail out his buddies, while the rest of the population is in dire straits. Most people don't have even $400 saved for their retirement, never mind, a few $1,000s. And the math just doesn't work. And also still people have an idea from the marketing of the financial machine that they should all be retiring in their 50s. And I'm always gobsmacked. Yeah. When I get, messages from people who say that they've either retired already or they plan to retire in their early 50s or mid 50s. And I look at their numbers and it's just like, there's no chance that you should be retired. I don't know, in what world, in what fantasy are you thinking you can live off the very meager sum that you've accumulated and then take big risks with it as well. And that's the crazy part. And I've seen this in my career many times. The tragedy is when they do this later in life, they basically don't have any chance to recover. Once the losses hit, once you give up your career and you start to atrophy your skills, or you leave the workforce and you don't look for another job, you are up the creek. It's very difficult to fix that without, some pretty draconian cuts and changes to your lifestyle. Another thing I've noticed lately is, I know there was a lot of people who were going in on properties together, had roommates, kind of like the Airbnb presumption, where they were thinking, well, I'll always have this person to help me share the cost of living, which might be a great idea, except that with all the mass job losses, a bunch of their roommates are literally up and leaving. And then you're left with one or two people trying to make the payments. And, all of the presumptions that have happened in the first quarter were like, well, we'll give them emergency benefits and deferrals. And then by, the second quarter, we're going to see that all get fixed. Or by September, everyone will be able to pay. Yeah. The holes are just getting bigger, Kerry. There's no money there to pay. And so they're going to roll out another round, no doubt, of some kind of support.
Yeah, we know that.
But at some point, to what end? Because if the jobs aren't bouncing back, if the central bank can't print demand and spending, which it can't. You had a $1.5 trillion tax cut in 2017 with the Trump admin coming in. And all of that was for naught. Because if you look at the tax revenues were right back at the all-time lows. Growth never materialized in the way that it was hoped. It was all a big sales gimmick. It was like a sales pitch from a salesperson, but there was no actual beat to that. And we're surrounded by sales pitches 24 hours a day, but there's no one actually responsible for the outcome here.
Yeah, I think we'll leave it at that. I couldn't agree with you more. It's maddening. It's insane. And it's not going to have a happy ending, but go take a look at Danielle's site, jugglingdynamite.com. Look at ours, Financial Survival Network. Sign up for our newsletter. Danielle, we'll pick up in a couple of weeks, and hey, maybe then we'll have a reverse Robinhood effect, right?
Okay. They're stealing from the poor to give to the rich once more. That's
the way it really works here. And certainly, look, they're kind of like the Facebook of stock trading, because Facebook's biggest profit center is selling off your data to third parties who then do what they do with it, and no privacy.
Yeah. When you're not paying, you are the product, right?
Yeah. Well, that's what Tim Cook said. Not that he's one to be held out, but he said with Facebook and Twitter and Google, you are the product, and that is certainly true. Anyway, just take a look at Danielle's site, jugglingdynamite.com. We'll pick up in 2 weeks, Danielle. As always, thanks. We'll talk to you soon.
Thank you, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.